Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today. As we see the crypto market continuing to uptrend, continuing to make our portfolios rise, continuing to make us salivate. And ladies and gentlemen, just take a look at the 7-day as we see some big winners. Unfortunately, FTX token is up the most, up from about $1.70 all the way up to $4.50, even passing $5 yesterday. And that's just the state of crypto. When scams and Ponzi scheme exchanges continue to explode while most of the market stays down. But another sign that an altcoin season is on the horizon is Solana, up all the way close to $60. This is a special time to be alive if you're a crypto investor, as you are in the early stages of the next bull cycle. Remember that it was just revealed BlackRock's Ethereum ETF plan has been confirmed by the Nasdaq filing. And they're on their way to making a BlackRock Bitcoin ETF getting passed this March, April, most likely. We have a couple weeks to a couple months to figure out exactly when. But there's a lot of bullish momentum built up behind the scenes that are going to cause our coins to all rise in value. Get utility-based cryptos out of your mind. There is no crypto utility that is going to make us go on a bull run. It is still all speculation until further notice. Choose your horses for this next cycle. And here, what I'm going to do is I'm going to play you a clip of Raoul Pal discussing how all the big boys are now flooding into this market. And the bullish momentum is not going to stop for a long time. Be prepared, my friends. We are well on our way.
5% off its all-time highs. ETH is 60% off its all-time highs, and let me not even mention any of the altcoins out there because those numbers are still probably 70, 80, or maybe even 90%. So we are at the beginning of a bull cycle of crypto, and you have multiple macro narratives that I think are very, very bullish, but you also have crypto native narratives too. That you've had the blow-ups of last year, all that's washed out and cleaned up. You've had the leverage taken out of the system. You've had a lot of the bad actors removed. And now you have the 2 of 3 of the world's largest asset managers in the world. In fact, Larry Fink, again today, the largest asset manager in the world, they manage wherever it is, $9 trillion of assets, saying out there, spewing bullish stuff about Bitcoin. Like, you have to understand, like, Larry Fink is not filing for a Bitcoin ETF because he's bearish on Bitcoin. He's not filing for it because he thinks it won't get accepted. He's not filing for it because he doesn't have demand. He probably has so much demand for it. And I think when we start to see these numbers, once the ETFs get approved and you start to see the numbers of, hey, BlackRock just raised X million or $1 billion, probably $1 billion, whatever, ETF for Bitcoin. Now they want to do it for ETH. Fidelity just did it. Now they want to do it for ETH. Now Vanguard want to get involved. And it will just create so much real demand for crypto. And we're before all of that. We're very early at this point. And of course, the Ripple thing yesterday, I mean, like, as if you didn't need another surprise positive catalyst for crypto. There you go. Like, there's another one right there. Just all the SEC stuff completely out the window with that. And that makes a strong case for altcoins to now rally, and Coinbase were fast to act there, I think, as well.
Yeah, so how I'm thinking about this as well is, like, we know about the ETF. Looks like, I would give it like a 75% chance, something like that. So it's pretty certain. Let's say they inject 10 billion of new liquidity into Bitcoin. How risk markets work, and again, you understand this because you've always traded the riskier end of the markets, traditional markets, is the money that goes in here gets recycled and goes down the risk curve. And $10 billion in Bitcoin is very different than $10 billion in Solana, because the market couldn't take it. But so it creates this whole move in the risk curve. While everybody now thinks, well, this all means it's Bitcoin dominance all the way forward because of the ETF, I think it's the opposite.
Completely the opposite. I totally agree. I think the reason for a big reason for Bitcoin dominance this year was Bitcoin is not security, everything else is, and that's now changing. But look, like, we all bought ETH and Bitcoin last summer because we didn't know what else to buy. We knew that was safe. and we would buy those and DCA on those until we got to a point where the world is slightly changing. We think things are getting better. Now it's time to move down the risk spectrum, because I don't want to just try and make a 2 or 3 or 4x on ETH. I want to try and make that next 10x, 50x, or 100x. But the probability of achieving that is much higher now than it was last year. And of course, nothing really did that in the last 12 months. So I totally agree. Like, people will start to sell their Bitcoin and start to sell their ETH and the other large cap to chase returns for higher risk assets, because you're, at the end of the day, if you're a Bitcoin maxi or an ETH maxi, whatever it is, you'll be sitting there, you'll be watching some random coin go up 1,000, 2,000%, and you'll be like, well, I need to get involved in this stuff. Like, now's the time to get involved in it. And that's how I'm thinking about risk now. Like, I've been through this period of averaging down on majors for the last 12 months. But, literally 2 or 3 weeks ago, I had, a long conversation with Mando, and we were like, now's the time. Like, this is it. Like, we need to change our portfolios. We need to have more risk in it. And it's not just about owning ETH anymore. And whether it's having levered ETH, whether it's having, other tokens that you think can give you a higher beta on returns on ETH, whatever it is, I think you need to push yourself out the risk spectrum here, and chase those returns, because you only get this shot like once every few years, right? You don't get it all the time. And I missed
don't fuck it up.
Don't fuck it up. Yeah, I love the don't fuck it up in your thing, and we're fully adopting it and pushing it. Don't fuck it up is the...
Now, ladies and gentlemen, that phrase, don't fuck it up, is a powerful phrase, because we do only get this opportunity in the crypto market once every few years. I have been a renowned altcoin investor, a predatory altcoin investor, and all of you know that I thrive in my alts. However, you all know that in 2022, while we were expecting an altcoin season to come, that never came. We did have to suffer for a bit, but I believe that this time around in 2024, all those backlog profits that we didn't get to make in 2022 are going to come back with full force this time around. And we're prepared for it. Ladies and gentlemen, what I'm going to ask you to do is to stay the course, pay attention, take Raoul Paul's warning seriously, and recognize the moment we're in. We are in the initial stages of the next bull run. You need to get your ducks in a row now. If there's another buying opportunity and pullback in the market before 2023 ends, that will be your last opportunity to enter. And I can't stress that enough. Bitcoin ETF on standby, ETH ETF on standby. And the altcoins are going to get the most benefit from all of this pandemonium. But now, ladies and gentlemen, I'm going to remind all of you why the market is different this time. Why more ROI is ready this time. Crypto Insights UK was our boots on the ground at Ripple Swell Conference. And they're saying that we're working on tokenization of existing assets like commodities, real estate, securities, and others. And the estimate for tokenization is $6 trillion by 2030. This is Scott Dickinson, head of regional financing and security services in Africa and the Middle East for Standard Chartered. And I want you all to take a listen, as this time around, into the next 5 years, we're going to have institutional level custodianship. And Ripple's going to play a powerful role in that.
For instance, a company called Tug, that is one of the main electric vehicle manufacturers in Turkey, well, the main, actually the only, and they use tokenization for various use cases that you would never think about when your brain is looking at tokenizing gold or currencies with stable coins, etc. It really pushes you to a point where you can think about tokenization as a way to manage the ownership of your house. Opening the door is actually some form of a token relationship. Opening your car and securing your ownership way beyond the traditional assets that we deal with today. So, Julian, because you are today very advanced, of course, in your journey, can you tell us a little bit about the use cases that you have imagined as a company and where you see the market moving?
Yes, I think there is a number of opportunities that are often talked about in terms of securities, and I think actually property has a greater opportunity in terms in terms of tokenization. And I think there's also those areas where transfer of value is difficult or challenging, whether that's through economic or regulation or society type challenges. The point, I'm just going to move the conversation a little bit, and you can pull me back if you want, Adrian, but I think the bigger challenge that we've got when we talk about tokenization is around both the regulatory and legal stage, so who owns those assets and what it is, but also the control function. And just a very simple example, you know, if Apple have got 1,000 shares, I think they have one or two more. If they have 1,000 shares and I buy a share, I have 1,000th of that business. Okay, how do I know they haven't given 1,100? Okay, I have people, the exchanges, the auditors, the accountants, the lawyers, all giving me assurance that there's only 1,000 Apple assets out there. So if we tokenize this building, and I haven't had the joy of coming here, do I know it exists? Do I know it is of substance? Do I know the occupancy rate, etc.? I'm going to have to rely on a lot of experts to understand the physical asset and the provenance of that before it then gets tokenized. And I think where the use case is going to come out is where you can get that provenance absolutely nailed and done it in a very effective way. That becomes really, really interesting.
Now, ladies and gentlemen, as you can see, tokenization is at the forefront of these agendas. And even here, Mike Su, acting comptroller of the currency in the United States, gives his take on tokenization and crypto as a whole, and how important the amalgamation of the old system with the new is going to be for bringing mass adoption into the crypto space. This was the former position that Brian Brooks had. And when he was the acting comptroller of the currency for the United States, a lot got done for crypto in the positive direction. And we were in the middle of an altcoin bull run and a crypto bull run as a whole. So listening to what this man has to say is going to pay dividends into letting you know what the future is going to look like. This is a longer clip, so I'm going to leave you with this for the day. And I need you all to digest it, take it in, let it marinate, stay informed so that you're not blind heading into what we're heading into. Ladies and gentlemen, stay the course and pay attention to everything going on, as I'm simplifying everything for all of you heading into the most explosive bull run of our lives. And as XRP holders, you are about to be godfathered in to the new 1%. Now, before I leave you for the day, a brief update, as I have been going over about 200 DMs in my OnlyFans community. And now I am finally caught up. So if you have been waiting for a response, those are available to all of you. And also, if you guys didn't know, we've been making aggressive profits. Some 300% from the bottom, others minimum 50 to 75% from the bottom on coins I've been recommending. And if you didn't know already, my recent portfolio update for the 2024 bull run is posted. And you better get that before these entry points that are still juicy are not there anymore. Take advantage now, or regret it when you realize that everyone's rich in 2024. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. Now I'll be back tomorrow with another video.
Well, on that point of trust, and I guess the proliferation of, the number of players in the banking system that aren't necessarily banks, there's also, as you know, a big movement to sort of create different modes of currency, different modes of payment here, particularly when it comes to crypto, which of course has had its own issues over the last year. We still have not gotten the formal regulation. I know that's not necessarily on your shoulders, so you should maybe go talk to Gary and a couple other people to see where they stand. But is there a solution, I guess, to the problem that I feel like crypto itself kind of created?
Yeah. So in my travels over the past year or so, and I talked to financial institutions, technology firms, other regulators globally. Whenever this comes up, something I have really, it's really emerged. There seems to be more and more of a divide between crypto on the one hand and tokenization of real world assets and liabilities on the other hand. What do I mean by that? Well, with crypto, that's the usual stuff that is reported in the press, and it's what basically shot up and then crashed. That's the crypto world. It's retail focused, largely, and it tends to be driven by the hope for speculative gain. That seems to be the main kind of fuel and interest in crypto, is that maybe I can make some money by investing in X, Y, or Z, a particular coin. It still remains replete with fraud, scams, and hacks. And some of the largest players remain unregulated. Crypto. Tokenization. What is tokenization about? Tokenization is focused on solving an actual problem, and that problem is settlement. Right? This is boring back office stuff, but it's super, super important. Every time you buy a security, every time you transfer money, there's a bunch of actions that happen in the background with regards to settling that transaction. And it seems invisible, but to those in the know, it involves a bunch of different players with a bunch of different handoffs. There's risks, there's frictions, there's fees. Tokenization holds the promise to collapse that and to simplify it if it's done right. And so when I talk to folks, there's increasing interest in tokenization because it solves a problem, and less interest on crypto. It's just like crypto is just, there's just so many problems with it. It's hard to comply with BSA and other laws. Whereas tokenization, if done right, you can really, that holds a lot of promise. The OCC, we're hosting a conference, a symposium in February on tokenization, where it's really going to be focused on legal rights, legal foundations, risk management foundations. Like, we want to establish, if you have good foundations, then that can grow and you get some really good responsible innovation out of it.
You mentioned the Bank Secrecy Act, and obviously it goes into this whole idea of know your customer here. Yep. I thought, if you believe the crypto faithful, or I should probably say more the blockchain faithful, the blockchain was supposed to address a lot of those issues. The idea was that it was a public ledger. There was some traceability here. What are the flaws there that you think need to be addressed through more regulation?
Sure. So at the risk of, this audience will get this. So with the blockchain, there's the public ledger. You get the wallet address. You don't know who that is. That's the fundamental problem. And there are all sorts of techniques to try to intuit or guess as to which wallet address belongs to whom. In some cases, you can make that transparent. But that's a fundamental challenge with the publicly permissioned blockchains. A lot of the tokenization efforts that I've seen are private. And in those private environments, you know exactly who you're dealing with. And you can apply all the KYC. So again, I think the reason why there's interest in tokenization is starting to take off, because it's a very clear problem for which you can try to provide solutions. And the solutions may or may not involve a blockchain. A lot of these solutions don't involve a distributed ledger in the way people understand it. It uses different techniques. It's kind of, we're technology agnostic, solve the problem, do it safe, sound, and fair. I think in the crypto space, there still continues to be we have this tool, we want to do stuff with this tool, versus what's the problem that they're trying to solve.
Would tokenization, though, still require banks to act as an intermediary? Would it still require, I guess, some degree of counterparty risk?
It depends. It depends on how they design it. And again, we don't have a strong view other than that development be done in a safe, sound, and fair manner, and we have some line of sight into that. That's our primary interest.
I've heard one of the criticisms towards regulators on this issue is the idea that know your customer should be different from know your transaction. And there have been a lot of folks in that space who've said that you can identify the transaction, have that transparency on the track on that side, while still, I guess, providing them some degree of anonymity, which is what some of those folks want.
Yeah. So I think there are some interesting efforts in this KYC space, and I think that it's an area where some innovation in terms of being able to achieve the policy objective, which is, why do we want to know the customers? Because we want to make sure we've got mechanisms to prevent illicit finance, terrorist financing. That's a really important goal. It's a law. It has criminal liability with it, so we don't want to mess around with that. We have to achieve that. Are there other ways of achieving it? using some of the new techniques that are out there. We're open, right? We're open to understanding and exploring those, but not at the cost of not meeting that objective.
Mm-hmm.